Nigeria's economy is at a critical juncture with troubling metrics that suggest the road to a healthy recovery from the COVID-19 pandemic could be long. Still, there is reason for optimism. The nation emerged from recession in the fourth quarter of 2020, and oil prices in the first quarter of 2021 have returned to pre-pandemic levels. So the question is, what more needs to be done? We are privileged to have Dr. Iyabo Masha, economist and member of the Presidential Economic Advisory Council to President Buhari, with us in the studio. Good morning, Ma. Thank you so much for joining us.
Good morning, and thank you for having me.
Indeed. The last time we had you on the show, you were in Washington, D.C. It was the early part of the year. We didn't have the GDP figures at that time. What do you make of the latest numbers coming out of the country for exiting recession?
Well, quite interesting. The consensus before the numbers were released was that the contraction will be between 3 to 4% year-round. But with a positive growth in Q4 of near zero but positive all the same, then we have a much lower contraction than we actually expected. I think it came to a little under 2%. And that's great because it does show that some of the stimulus policies that were introduced worked very well. So we'll have to see where we go from there. I will say that the worst is not over. It may or may not happen. We could see 1 or 2 quarters of negative growth over the past year, but over the next year. But I think all in all, we could be seeing the end of the COVID-type policies, and then we can focus more on policies that are more about transforming the economy.
Fantastic. I also want to ask, in the fourth quarter of last year, we also got unemployment figures from the Bureau of Statistics, 33%, 23 million Nigerians out of work. How do we arrest that slide, Dr. Masha?
Okay, the important thing to realize is that only a growing economy creates jobs. So in terms of how we change things, it's not going to be so much as arresting the tide as arresting the slide, as more of changing the tide, because since 2014 we've had consecutive quarters of higher and higher unemployment. But there's some silver lining. If you look at the disaggregated data, the agri-heavy states like Sokoto, Kwara, they did very well. They had only about 13% unemployment rate. And then the states that are heavy in non-agri production, like Rivers, Akwa Ibom, Imo, they had close to 50% unemployment. So that tells me that there's still a lot of upside in agriculture, and that's one of the areas in which we can double down on the reform policies, and then we will be able to at least absorb the army of unemployed that are coming into the market.
Thank you. So you mentioned states. I want to ask you about, I guess, some of the groups. More women than men are unemployed. More youth than men and women are unemployed. Is there a blanket policy to target all the groups at once, or do you pick and choose? How do we?
Well, it will have to be a combination of both. At a very general level, we're going to need policies that makes the youth market ready. Market ready in the sense that not everyone is going in search of wage employment. So it could mean fundamental reforms of the curriculum so that we emphasize things like entrepreneurship and practical curriculum, vocational training, so that by the time they leave high school, many of them can easily go into non-wage employment. They have all the tools they need to succeed. That's a general policy that will benefit everyone. But then the gender policies are also very important. Gender literacy rates, female literacy rate is around 53%, male is around 70%, and yet you have unemployment higher in the female because of the correlation of education and employment opportunities. But when you look at the poverty data coming out of NBS, you find out that women are, in all education categories, the women have lower poverty rates than men. So that means that with even the lower opportunities that they have, yet they have better outcomes. So that is, to me, is a compelling argument for government to then introduce more gender empowering policies, because then we can have much more profound impact on poverty, much more impact on employment creation.
Thank you, Matt. Very, very in-depth. I want to now pick your brain on inflation. Headline inflation, 4-year high, 17.3%. Food inflation, 21.7%. Dr. Masha, how do we get that down to single digits, if at all?
Yes, okay. For this year, I believe that the inflation objective of CBN is 11.95%. So getting to single digit is going to be more in the outer years. But having said that, what we have to recognize is that there are two main components that drive the price outcome. One is the purely monetary component, the high rate of growth of money supplies. Central bank is creating a lot of money, 31% last year. And the second one are some of the structural impediments in the economy that make production more expensive. Look at what is going on in the ports alone. A lot of the high cost is going to be transferred to consumers. And then we have challenges in the food belt, herders and farmers fighting, and security challenges. So these I see as the main drivers. In terms of what happens over the next year, I think food prices will go down as the harvesting season comes on board. But then we will still have to, lots of investment going on in infrastructure and some of the energy gaps that will then help to lower the cost of production and bring down inflation. But there's still a role for central bank to play, even though monetary policy is not as effective because of the structural challenges. But there's a role for central bank to play. The monetary policy rate has been 11.5% since September. So it might be useful to move the rate now and see what we can achieve. It may not bring down inflation, but it will correct some of the distortions in the money market. And on top of that, central bank also should make an effort to lubricate the foreign exchange market. A lot of foreign exchange importers are now buying at the unofficial rate, which then feeds into the prices that show up in the marketplace. So these are the three main areas I see that can bring prices down over the next year. Very
in-depth, Dr. Masha. I want to ask you about fuel and the pass-through effect on inflation. And we just discussed it in our last segment with our Chika Mbono, our ICE business analyst. The Minister of State for Petroleum, Timi Presilva, saying that deregulation could possibly happen towards the end of this year or sometime this year. Can the fiscal structure of the country maintain that with respect to when deregulation, PMS deregulation will happen?
Yes, again, let's go back to the fiscal strategy for this year. The assumed oil price is $40 per barrel. So, and now oil is around 70, give or take $1 or $2. So it's a positive shock. So it will not derail the fiscal objectives because the expenditure has been constructed on the assumption that oil price will be $40. So if it takes a long time for the regulator to come up with a plan on how to address the subsidy issues of whether to pass on the price or not, it's worth taking the time to have a very strong policy in place and do the consultation with the private sector. But as far as the fiscal impact is concerned, there's lost opportunity cost, but it doesn't derail the established expenditure path.
Thank you. I also want to ask you about trade. Dr. Ngozi Okonjo-Iweala, the new WTO, World Trade Organization Director General in Nigeria, paid a visit, talked about the need to boost Nigeria's trade. How do we do that?
How do we boost trade? Trade takes a very, very long time to grow. And that is because most of the challenges to trade for many countries is in the non-tariff barriers. The whole port apparatus in Nigeria, for example, is configured for import. So if we want to be a trading nation, a nation that expands on our trade, which I think is around 10% of our trade now is with Africa, countries, and we have a share of 1.5% of total global trade. So we will have to introduce a lot of reforms on that side of correcting a lot of the imperfections in the structural impediments and also in the markets. And then that will create the atmosphere, the enabling environment for trade to flourish. But on top of that, we would also need to increase the complexity of our economy. We're locked up in too many low value added products that frankly have no market in the world. So by introduce the kind of industrial policies that the government is now looking at is focused on that, improving complexity, improving value added in industries, and then taking advantage of some of the emerging global trends, including with the Africa Regional Trade Organization.
Fantastic. What does Nigeria's economic transformation look like? Is it driven by technology or trade, manufacturing? What does it look like to you?
First of all, there are some global trends that are going to happen over the next 10 years. And we have to put that in perspective before we talk of how it feeds into our own options. One is the transition away from fossil fuel. Now, that is even going to be much faster than many countries planned. So that is obviously an important issue for us because we are an oil-dependent economy. There's also the changes in the global environment, the global value chain because of COVID. Many reshoring going on in countries, bringing back manufacturing into the countries and not relying on exports. And that's going to be serious consequences, have serious consequences for countries that depend on those kind of export. So taking all of that into consideration, I will say that there's a lot of upside in technology. Technology, the fintechs and the communication sector did very well in Nigeria during COVID. And there's a very large market, African market that we can explore. So there's a lot of room for us to do well there. Agriculture, the same thing. We've seen that there's lower unemployment coming out of agric-dominant states. And we also, what we have to do now is to move up the value chain in agriculture. More than 40% of what is produced in agriculture does not get to the market because we just don't have the apparatus to really use those products, extension services, storage, market access, all of those things. So if we can just focus on those few areas, then I think there is a lot of upside for the economy.
Again, very in-depth, Dr. Masha. I only have a minute to go. I want to ask you about the time frame. What's your outlook as far as time frame to achieve what we need to do to get this economic transformation?
There will be two periods, the medium term and the long term. In the medium term, I'm talking of up to the end of this administration, we will see a lot of the impact of the investments in agriculture, investments in energy. We will start seeing them in the economy. So I envisage that we'll see some reduction in unemployment and higher levels of growth. Then the rest will be over the next 10 years when we expect that at least most of the unemployment could be right around 2 to 5% by then. And so we will see an economy that is more complex, that is more able to compete both in Africa and in the world. And with appropriate governance reforms, then the sky should be the limit.
Dr. Iyabo Masha, member of President Buhari's Presidential Economic Advisory Council. It's been a pleasure. Thank you so much for taking us through all these metrics on how to get Nigeria going. Thank you.
Thank you very much for watching.